Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Thursday, June 16th, 2016, and this is the Daily Report for Gold and Silver. Wild swings in pretty much all of the markets overall today, including oil, equities, and definitely precious metals. Gold trading to a intraday high last night of 13.18. That is correct, 13.18, putting it up in double digits, well over 10. I think it was up maybe $12 to $14. However, we did see a key reversal in the market as we went from double-digit positive to unchanged to actually close negative on the day at 1282.90. Call it 1283. Puts it down about $5 to $6. And the low on the day is right where we're at, 1282.20. On today's report, we do have a long position. We have stops in play. The $64,000 question is whether or not this is consolidation or a correction as we have been anticipating in the market. And we'll look at a couple of gold charts, I think, that will really clarify not only the move that we have just seen, but where we could see it go to the downside and what point we'll look at for a key reversal in the market, all on today's daily report. Consider the following two facts. Fact one, gold has been in a dynamic rally over the last 3 weeks. When we look at a weekly chart, absolutely no doubt we have seen this market really take off and run away since hitting these lows at about 1200. Week 1, week 2, this being week 3. That's fact one. Fact two is that we were looking for the market to go over 1300, 13 to 1306, and at that point find some sort of resistance. In other words, we have been anticipating some sort of a pullback in the market. We've been effectively trailing our stops up. Our stop is currently under 1275. We do have some subscribers that took an alternative strategy getting out the other day at roughly 1290, 1294 in that area. And as I said in my commentary when I suggested two different strategies, is that there is no wrong answer when pulling profits. So whether you took it before or whether you're still in this pretty wild ride today, there's profit to be taken. It's simply where and when. And there is a third fact, and the third fact is we have seen ranges in this market that have begun to get a little bit muted, a $10, $12, $15 range. We certainly got more than that today, low around $12.80, high around $13.20. It's a $40 range in the market. Now, that being said, we are looking at a hourly chart, standard candlestick format. The day is really broken here, this being the beginning of the 16th, and you can see that at that point, really we had broken above 1300 right here, but drifted back lower and then traded to this really intraday or record high this year at this point, because these numbers up at 1318 have not been seen in 2016, but from there, a tremendous round of profit taking ensued, 7 hours to get it to the price of 1282. Now, with that in mind, the real question has got to be, is this a consolidation, the beginning of a correction? If it is a correction, where could we see gold prices go to? And to do that, we need to pull up our daily chart. We've done just that, and first I do want to address the first question that we will at least give our opinion on as to whether or not what we're witnessing is some sort of consolidation or the possibility that we have just begun a correction. At this point, I'm going to have to say that the probability is much higher that we've entered the correction, that anticipated correction, and with that in mind, we've added a new fib retracement into the market so that we could plot, if in fact we're looking at a correction, where we could see this market go to. And this is exactly what I'm looking at. Dynamic rally starting end of last year, trading roughly at 1040, propels this market up to the first of a couple of highs that we'll see this year. In this case, 1273, and I believe that concluded our wave one. From that, we went into a correction, but it was an irregular correction in that what we saw was an A. This A, of course, was this compression triangle into an irregular B. Irregular because the high of B is above the high of this conclusion of wave 1. And from there, a final concluding wave 3, which concluded that C, and also now concluded the larger wave 2 found within it. I also believe that we properly identified the beginning of a wave 3, and that wave 3 is going to be made up of a series of waves and counter waves within that. At this point, I believe that there is a high probability that what we have seen here is wave 1 of this new 3, and we're going into wave 2. And that will probably be something like this was the wave 1. We're now in wave 2. We'll go into a wave 3. That can't be the shortest. Some sort of a 4. And we'll conclude this 5th wave here. This, of course, is our intermediate count that we would be looking at. But we'll conclude this well above 1,300, possibly, I believe, as high as 1,400. Now, what we've done to answer our next question, which is, okay, if we're in a correction, where could this market go to? And so what I've done is I've just set up one fib retracement, which begins at 1,200. It concludes at this new high of 1318, and then I've plotted these numbers here, a 38% retracement and a 61% retracement. With that in mind, what we could see is something like this is our wave 1, and then a correction that should take us either to an intraday low of 1273. That would be a shallow correction as deep as 1245. That would be a 61% retracement. And then I believe we will see a conclusion, 1, a 2, and we'll go into a wave 3 of 3. And that, of course, would have to really go over this high that we've already seen, which is about 1318. 1. 2, the one thing that you do want to really be cognizant of is, even with that in mind, let me change my my color scheme here, but even with that in mind, this downward wave could be really in a series of 5 also. So we could get a 1, a 2, a 3, a 4, and a 5. We could also see it culminate as some sort of an ABC because we are in a wave 2. But whether we see 5 waves down or 3 waves down, meaning alternate waves, of course, I think we'll see this current correction take us anywhere between 1273 and, as I said, 1245. Now, the key also is that this is only one day. We'll have to see if we get follow through. But this is certainly the components that we would look for at the beginning of the correction, 1. And 2, we were looking for the market to top out roughly at the 13 to 1306 area. And if you recall from, I think I spoke about this on Friday last week, but that our typical rallies, strong rallies in gold, will exceed $100. And the range can be anywhere between, say, 90 and 120. Well, at this point, what do we have? Well, 1,200 to 1,320, there's our $120 rally. So it falls within all of the parameters that we typically look at, which is why my cards right now tell me we probably have entered some sort of a correction. Now, if you did get out of the market the other day and pull profits, you definitely want to sit on the sidelines. Now, last night, as I saw this market break above 1,300, it was a different story. If we had seen the market close above 1,300 today, at that point I would have really said, let's buy the breakout, and our longs that stayed in, we would probably have added to that position. However, with this most recent data and sell-off, you can see it's a pretty dramatic sell-off and a pretty dramatic range that we covered. My sense is that we're probably in store for more downside. You can look at the 73 area, and seeing as our stop is below 75, make sure that it covers this particular area. So if we do get a soft landing, you can still maintain your long position. Of course, you could exit the market now, but we're talking about what, an $8 range here. You know, my sense is I don't know where the tops and the bottoms come in. I do have a forecast model that can be effective and give us good parameters, but until the future reveals itself, these are forecast models. Nothing is etched in stone. So As I've said on Friday, I said it again the other day, you're never wrong taking a profit wherever you take it. And it's a double-edged sword in trying to maximize profit potential and minimize potential drawdowns. I think we're doing a good job of that right now. So regardless of what your actions are, sit back, drink a cup of coffee, and enjoy the fact that we've got another good trade under our belt. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.